to start off with now is Learning Unit 2. Now, in Learning Unit 1, we looked at the reconciliation for your bank reconciliation. So reconciling your bank statement to your general ledger account. Now, we're going to do a similar Okay, so you have a question if there's any chance of us having extra classes for this module. Yes, we can discuss it. I'm going to do this, and then once we finish, let's quickly have a chat after class about it. Then we can see how we can assist you. Okay. Okay, so your debtors and creditors reconciliation is also a reconciliation we do at the end of the month, where we reconcile your debtors list to your debtors subledgers. Now, the debtors and creditors subledgers we discussed in the first semester, where you physically go do each and every individual debtors account, where you do their balance and then you add any invoices or payments or any journal entries that needs to be accounted for discount on their account. Now, what would happen is we would do account for each and every debtor or creditor, and then we would add all of their totals together to create our debtors or creditors list, and then that amount will be then agreed to our debtors or creditors control. Now, why do we do this? We do this to make sure that if we made any errors in capturing an invoice, so sometimes what would happen is you accidentally capture an invoice to the incorrect debtor or to a creditor account, or you enter the incorrect amount, which means there's a difference between what's in your control account and what is in your individual debtor listings. Now, this is a way to pick up those errors and to rectify it so that you send out the correct statements to your customers and make sure you receive the correct statements from your creditors. Okay, so that's why we generally do it. Now let's quickly look at what is the learning outcome specifically for this learning unit. The first one is you need to be able to record the financial transactions in a debtor's ledger or a creditor's ledger. Okay, so you need to be able to do the general ledger account, so the big control accounts. Okay, so the individual ones would be their own individual account, which is sort of your statement, whereas the control account is all your debtors, all your creditors combined in one account. Then make the necessary adjustments and corrections in your accounting records. So that is, if there's any mistakes, how do we fix it? And then prepare your debtors and creditors reconciliation. So that is reconciling your control account back to your individual debtor accounts and your debtors list, which is drawn up from that. Now let's quickly have a look. This is an example of what it would look like. So you would have your total debtors per this is your control account generally at the top. And then you would have any adjusting entries that might not have been reflected or needs to be corrected to get back to your general ledger account. Now, there shouldn't be a difference between the general ledger account and your individual debtor accounts. Now, the reason we want to do this is normally we update our debtors and creditors accounts on a day-to-day basis to have it real time, so that when your debtor phoned you, you can tell them, okay, this is exactly what is outstanding currently on your account, so that they can pay it. And similarly with your creditor, if I phone my creditor, I want to know today how much is outstanding on my account so that I can pay it, or that I know how much I still have left on my facility to use for a purchase, for example. Now, if we summarize all of our individual debtors or creditors, that is called debtors or creditors ledgers. And then the total of those debtors or creditors ledgers, which is captured in the list, should then agree back to our control account. So we take each and every individual debtor or creditor ledger. So that is each individual creditor or debtor, their listing showing their running balance. If we add those balances together, we create a list at month end, and we then agree there to the total per the control account, which is our general ledger account, where we account for all the debtors in one account as opposed to the individual debtors. Okay, now we do not have 40 minutes left, so we're going to, in the last 20 minutes we have, we're going to look at activity 2.1, which will explain these concepts. So I'm going to give you 10 minutes to just familiarize yourselves with the information, and then we will discuss it. So let's quickly see, it's on page 38, 39, and 40. Now, what the question asks you is it asks, prepares the debtors control account in the general ledger of Zilla Hardware. The account must be properly balanced. Now, if they tell you it needs to be balanced, it means you have to show an opening balance. Then you have to include any sales, any payments, and those transactions are generally pulled from your individual journal accounts, as well as your general journal. So you will use your debtors journal, debtors allowance journal, cash book receipts, and general journal to actually account for those transactions. Now, what information do you need to actually determine the opening balance? Generally, the opening balance would be derived from your individual debtors list. So if you take the total of all the debtors list from a previous month, that is normally your opening balance. So that's how you would do the control account. So that's where we're going to start off with, and then they ask you to prepare the debtors ledger, including the debtors list. So now they want you to update your debtors ledger. So they want you to update each and every debtors account with the transactions that are listed in these individual journals. And then the debtors list you will only draft once you've completed each and every debtors journal. And then the last one is an account statement that you would do. Okay, so number 1 and number 2 is sort of a recap from what we've done in semester 1. So what I want you to do is start off with the debtors control account. I want you to complete the control account for me, and then we're going to discuss that, and then we will just go through the debtors ledger if we still have some time left. Okay, so I'm going to give you 10 minutes just to do the debtors control account for me based on the information provided, and then we will discuss it. Okay, can you guys just indicate, are you guys okay? Do you still need a few more minutes or should we discuss the question? You can just indicate in the chat function, do you need a few more minutes or would you prefer us to discuss the question instead? Okay, so let's discuss the question. So, like I said, when they ask you to do the data's control account, the data's control account is our general ledger account. Okay, so remember debtors is seen as an asset account, which means the balance is normally a debit balance if it is if they owe us money, if our debtors owe us money. So when you do your debtors control account, you would list it as follows. Now we would create the opening balance would be on the debit side. Okay, let me just make this bigger so all of you can see properly. Okay, so it would be on the debit side. But how do we actually know what is the opening balance based on the information provided? So in the information, they've told us at the 31st of May, so we need to do the debtors control account for June. So at the 31st of May, they've given us our debtors listing. Now your debtors listing, I'm just going to make it a little bigger so as you can see. So the debtors listing should agree to your control account. That's why we do the reconciliation. Now, in the information, they've given you the debtors list, they've given you your journals for the month, and then in the additional information, they only talk about a check that was returned and a deposit that was directly deposited into the bank account. So because they don't tell you there were any errors between the reconciliation and the control account from the previous month and the debtors list, you can use this balance as your opening balance because it would have been the same based on the reconciliation. Okay, so that is our opening balance. Now from first semester, how we account for the debtors transactions in our debtors control is we take each and every journal, we go look for the debtors control column. Okay, so in the debtors journal, the debtors control column, that represents any credit sales we have made during a month to our individual creditors. Now, when we make a sale to someone, that means we deliver goods or services to them in return for money, but they haven't physically paid the money, but that money is due to us. So that means our debtors control account will actually be increased by that amount from our debtors journal. So it's sales and VAT. Now, why do we say it's sales and VAT? We look at what is the other columns. Now, debtors control is your sales amount and VAT amount combined. You put your folio number, which you will remember from first semester is up here. It's the DJ6. And then we take the total amount, which is the 142,871 here at the bottom, and we transpose it in there. Okay, so we literally just taking the information from the journals and transferring it to our debtors control account. Now, if we move over to the debtors allowance journal, in the first semester we said debtors allowance journal shows any returns that we've made, our debtors have made. So what will happen here is this will actually reduce our debtors balance because they didn't actually take those goods, they returned it, so they no longer owe us the money. Similar, we take the debtors control account, but let's see, it's sales returns and input VAT. So that means on our credit side, we will account for it, and then we say it's sales and VAT. Sorry, this should be 30 June, not 11. Sales and VAT, and we put the total amount. Where did I put? Okay, so I put a general journal in there, sorry. Let me just undo what I did here. Okay, so that is the general journal one. Let me just get the correct entry. Oh, that's credit losses. Okay, so on the 30th, we then do the sales return and VAT, and that's that 22,000, which agrees to our credit allowance journal. Then cash book receipts, that's any payments we receive from our debtors. We will then account for as well. Now you'll see there's a bank column, so that is the total cash we receive, but it is not only just for debtors. So when we look at cash book receipts, we only look for the debtors control account. Okay, that is the amount that you would include in here. Now receipts are generally also on your credit side because it reduces the amount outstanding. So in this case, it's the 67,000. So you'll see it agrees to here. So that's just something important to note. You only look at the debtors control column, not the bank column when you use the cash book receipts. Okay. Then now what we have to do is we've got the general journal. Now the general journal is individual journal transactions. So you have to go look for each and every journal that has a debtors control amount in there. Now what's great about the general journal is they actually show you whether it's a debit or credit side of your account. Now the first entry, we're going to credit our debtors control with 186, and that is a settlement account. And the two accounts that it relates to, sales and VAT. So what happens is on the 11th, we've got sales and VAT for the 1861. Now I know in the test, you will work systematically. You will not necessarily work according to date order. It's fine. As long as you enter all the transactions in there, we will mark it as you have indicated them, as long as you get to the same amounts. So don't worry about the order you do it in the order that's easier for you to understand. Then the next entry, they transferred an account from creditors control to debtors control. Now that sometimes happens where I've overpaid a creditor, or I have bought something and then returned it and already made a payment for the outstanding account. So now my account is actually a positive on my side. So they actually owe me money. So what I do in my own books then is, instead of showing it as a creditor's control, I then show it as a debtor's control to show that that business owes me, or an individual owes me money. So this is what happened here. So we're just transferring it from creditors to debtors. So I'm going to credit my debtors account again with the amount of 36,000. Then the next entry is the credit losses. This is where we've got a bad debt or irrecoverable debt that was written off. Now we also reduce our debtors control. We no longer will receive that money. So this would be credit losses and VAT. So I add credit losses and VAT and I capture that amount in there. Now let's move on to the next page. Then we've shown interest or charged interest on H owner's account, and then the next entry we've reversed it. Now I know you guys are thinking, well, we've put it in, we've taken it out, do I actually have to show it? Yes, you need to show both entries because you do actually get marks for it, even though it does not have an impact. So what you would do is you would add the interest income on the one side and you would add the interest income on the other side. So the one is where we've charged it on and the other one is where we reversed that transaction. So you show both entries. Now let's quickly look at the additional information if there's anything that would impact our control account. So it says Zilla Hardware received the bank statement. The following entries appeared on the bank statement. So the first one is the check received from LU1 was returned by the bank marked RD on the 17th. The transaction was not recorded. So if they tell you it has not been recorded, it has not been reflected in any of our journals at the top. So that means we still need to account for it. And then they tell you H owner had deposited the amount owing directly into the bank account on the 30th of June. Okay, so they have deposited that money into our account. That's why we reverse the interest. Let's quickly check if we see H owner on our cash book receipts. Yes, they've already accounted for it. So from the additional information, we only still need to reflect the check that was RD'd in our control account because H owner's receipt has already been included in the cash book receipts. Okay, now if a check bounces, that means our debtors control would actually increase because of the fact that we did not receive the money, so we will show that amount. Now the next step is to identify which side is the bigger of the two. Now normally your debit side should be bigger than your credit side, so if we add all the debits together, you get 228,000. If we add the credit side, you get 167,000. So what we do is we add the debit side. Okay, clearly I missed the transaction. Okay, so the transaction I missed because I wasn't focusing is that sales and VAT return. Because of the fact that LU2's check bounced, we need to go back to the journal entries to see, did we give them any discount? Now, we did actually give them a settlement discount of 1861. That's why they told you it's the check on the 17th. So we also have to reverse the discount that we've given that debtor. So that is the transaction that I missed, that you also have to include in there. So then you add up all the debits, your credit side would agree to that, and then you balance your account, which is the difference between all your credits and the 230 that it should be, and then we carry over the balance, which is our opening balance for the following month. Now this balance is what we would then agree to our debtors listing to our credit debtors list. Okay, now I see we ran out of time, so I'm just going to unhide this information just to quickly show you what you would have had to do for number 2. So for number 2, you would do each and every individual debtors account. Now this is what we've done in the first semester. You would literally take the information per your debtors journal and you would start, okay, LU2, and you go account for the invoice. So what I did is I took each journal and then entered each and every transaction for each data into their account so that I know I've completed all the journals. So I started here with the balance. This I got from the previous data's list, and then I added the invoice per the data's journal. And I did that for each and every data, and I did it for each and every different type of journal to get to their balance. Then what you do is you take all those balances at the end and you create your datas list. So you show all 5 datas, and that balance agrees to what their statement balance would be to get to the total amount at the end of the month. Now that amount here, the 62,544, agrees back to the 62,544. Then you know that you've reconciled it appropriately and that everything has been captured. And then an account statement, the only thing different from your debtors account is you take the debtors account and then you just at the bottom add whether those invoices or transactions, how long have they been outstanding? Is it 30 days, 60 days, 90 days, 120 days? And the balance should agree exactly with what's on there. Okay, so that is what was required of you in this question. Okay, do you guys have any questions? Okay, and then just for learning unit 2, I want you to complete question 2.2 as well. That's similar to what we've done in class so that you can just practice it.